Good morning, everybody. I'm pleased to welcome you all to the Napatech Interim Management Statement Briefing webcast for the first quarter of 2019. I'm Ray Smets, CEO of Napatech. With me today is Heine Thorsgaard, our Chief Financial Officer. Today's Q1 2019 Interim Management Statement was fully and finally released earlier this morning on the OSE and is available on our website at napatech.com. Following our prepared remarks, I will open up for your questions. If you'd like to ask a question during our live webcast, please follow the instructions on the webcast screen to call in to ask your question. I would like to inform you that the Q&A session is included in the live webcast as well as the recording. For your information, a recording of this webcast will be available on the Napatech website after this morning. Next page, please. Please note that this presentation contains forward-looking statements that are subject to a number of risks and uncertainties. Our actual results may differ from those discussed in forward-looking statements. Next slide. During this presentation, I will present the Q1 2019 business highlights, an update about our business and market, a detailed review of our Q1 2019 financial results, our 2019 business outlook, and then we'll open up for your questions. Next slide. Business highlights. Next slide. I am pleased to announce that Napatech had a solid start to 2019. Our results in the first quarter were within our expected guidance range, and a good sign that our business momentum is continuing from Q4 of last year and into 2019. In terms of revenue, we delivered 38.3 million DKK, or 5.8 million USD, in total revenues, which is up 72% over the Q1 of 2018. This gives us a nice start towards our annual goals and expectations. Gross margins were also solid for Q1 at 69.6%, ahead of our 68% annual guidance. Some of this good performance is attributed to product mix, but we do expect gross margins to remain strong as we had previously guided in 2019. We also kept our eye on the bottom line with a lowered cost structure and to optimize our cash balance. We were able to achieve our quarterly results with operating expenses of only 31.2 million DKK, pre-capitalization of our development costs, compared to 41.5 million DKK in the first quarter of 2018. Our solid revenues, our strong gross margins, and our lower than guided operating expenses delivered a nice surprise for our shareholders. We are happy to report that cash flow from operating activities was up 12.4 million DKK year over year to 4.5 million DKK. And our total cash and credit equivalents at the end of Q1 2019 was 42.7 million DKK. All of this was good performance. Plus, we had good progress on customer pipeline development in Q1. I hope you'll agree that this was a great way to start 2019. I will invite Heine to present more details about our financials shortly. But now, next page, I would like to give you an update of our business and some background of activity within our marketplace. Next page. If you've been following our market, you know that Napatech sits within a dynamic market space. Over the last few months and quarters, strategic investments have been chasing technology and business opportunities in the SmartNIC and FPGA sector. In addition to Napatech adding to this excitement, with our recent fully completed cash raise of $8.9 million, which I will comment on more shortly, we saw several other notable investments and acquisitions over the last few months as the industry consolidates around a strategic need for more configurable computing solutions on a SmartNIC. To name a few, Mellanox was acquired in a high-profile investment by NVIDIA for $6.9 billion, which rivals the large investment made of Altera by Intel a few years prior. Xilinx also announced that they acquired SolarFlare, and Intel acquired Omnitech. Both of these acquisitions demonstrate the strategic value of specialization in building SmartNICs, and especially point to the value proposition FPGAs bring to strategic players in our industry. As Napatech keeps its sights on our product development strategy, rest assured that we are also strategically aligned within the ecosystems of the larger FPGA players like Xilinx, Intel, and now NVIDIA. We will strive to be relevant. FPGAs can solve more problems where standard offload NICs and GPUs cannot. So the FPGA continues to evolve within the industry, and Napatech remains in a good place to capitalize on the trends we are seeing, including what we hope will be improved valuation of our overall business in the public market as we execute and grow as an important player in the fast-moving smart NIC market. Next page, please. In addition to the consolidation we're seeing, market reports show that we sit in a lucrative market space where more money will be spent on standard servers with more powerful compute resources delivered by way of the smart NIC. In these trends, more and more of the smart NICs will be FPGA-based. The smart NIC is the fastest growing part of the overall NIC market and where we participate. The smart NIC market alone is a $1.4 billion market by 2025, a very good market to work within to find a new revenue stream and growth. Smart NICs fit into a standard open server, so our market tracks how the server market is evolving. Servers are deployed to build new data centers, cloud networks, and 5G infrastructure. The adoption of multi-tenant cloud systems continue to drive server utilization rates up. As IoT and connected devices grow, shipments of servers become larger, but they also drive demand for additional data center server computational capacity to support them. The adoption of new software technologies like AI and machine learning, for example, drives a further surge in server compute demand. As cloud server utilization reaches saturation, this translates into an expected acceleration of server shipments. Again, as more server units ship, there are more places for the Napatech FPGA solution to reside. But more importantly, the evolution towards higher utilization of servers moves the FPGA into the spotlight for application acceleration and security performance improvement, and will play a critical part of the virtualization marketplace. Next page, please. In the end, none of this market growth matters unless we can address it with great products and services that our customers need and like. In a recent survey that we sponsored with IHS Markit in February of 2019, our customers gave us very high marks for reliability and dependability, along with top marks for performance. Napatech is a technology business with a reputation for delivering powerful, highly reliable, best-in-class FPGA-based smart NIC solutions that accelerate and improve performance of critically important networking and security applications. But with great power comes great responsibility. Napatech has more than 150 customers globally who use our solutions in mission-critical applications. In addition to being considered highly reliable, our software is viewed as a key advantage in our ability to deliver high performance and more needed product features. We appreciate our customers' positive feedback, and we intend to keep it that way. We will compete to win new customers, and we will strive to expand within existing customers as their needs evolve for higher, very powerful standard open server-based compute solutions. And we will do it by bringing best-in-class reliability to the market. Next page, please. We serve both the OEM and the end-user markets. OEM customers build our product into their products and ship to their own end-user customers. We also sell directly or through VARs to end-user customers. Although OEM customers represent most of our revenue, both are important to grow. We are happy to present several important wins. Across the top of the slide, there are 3 wins that illustrate how our products are consumed in combination with top networking and security open source applications where we can accelerate them and create higher performing results. First, a leading US-based network infrastructure technology company recently selected Napatech's FPGA-based SmartNIC to improve testing of their high-end switching solution leveraging the T-Rex open source application, which is a software-based traffic generator. We were selected due to our ability to accelerate T-Rex and run it with 0 packet loss. A top multinational pharmaceutical company selected Napatech to accelerate Snort, a popular compute-intensive open source application used for intrusion prevention and detection. They wanted this to work within their enterprise-wide network while running a tenable Nessus network monitor solution on the same server, essentially allowing them to attain vulnerability assessment and security on the same machine. They selected Napatech to meet scaling and performance needs in this application. A top 3 multinational retail company selected Napatech to accelerate the open source cybersecurity application called Suricata, an open source network threat detection engine. This application needed to operate at a high level of performance, so they selected Napatech for our superior performance and scalability for this application specifically. The 2 customer applications on the bottom of this slide illustrate how we're evolving technology to deliver faster, more powerful, inline, zero packet loss performance will improve our customers' cybersecurity solutions. On the left, on the bottom, a major European-based specialist in cybersecurity products and services have chosen to work with Napatech's emerging Link Inline product to help deploy higher-performing VPN gateway solutions with IPsec. We were chosen for our experience, speed, and quality of delivery, and our performance. And lastly, a leading UK-based business communication service provider chose Napatech's market-leading packet capture solution to provide inline filtering of VoIP session telemetry with zero packet loss. Again, with all of these examples, Napatech was selected because we deliver great products at scale and deliver high performance. Next slide, please. As we mentioned last year, we have engaged with Xilinx to develop an innovative solution providing an FPGA as a service to deploy crypto acceleration for customers of Amazon's AWS EC2, found within the AWS marketplace. This service is now available and orderable on AWS and makes for an easy way for developers to build and test cybersecurity solutions using the Napatech software and the Xilinx FPGA. We hope this collaboration with Xilinx and Amazon will be a good catalyst for the Napatech software solution in more customers' cybersecurity designs, which could lead to future software or service revenue as this part of our market emerges. And it is an example of how Napatech can lead in specific innovative use cases leveraging our FPGA software solution. Next slide. Now let's turn the presentation over to Heine Thorsgaard to present more details about our Q1 2019 financials. Heine?
Thanks, Ray. Turn to slide 13, please. Revenue in Q1 19 amounted to 38.3 million, up 72% compared to Q1 last year. Gross profit was up 77% compared to Q1 last year and amounted to 26.6 million Danish kroner in Q1, with gross margins up 2 percentage points to 69.6%. The increases in margin is reflecting a slight change in the product mix compared to Q1 last year. Staff costs were down 20% in Q1 compared to Q1 last year and amounted to 24 million. Other external costs amounted to 7.2 million in Q1, a drop of 38% compared to Q1 18. Operating expenses covering staff costs and other external costs before transfer of costs to capitalized development costs amounted to 31.2 million in Q1 compared to 41.5 million in Q1 last year. This drop of 10.3 million DKK in costs, corresponding to a drop of 25%, is the result of the cost savings initiatives implemented in the second half of last year. Earnings before interest, tax, depreciation, amortization, and capitalization of development costs, in short listed on the slide as EBITDA, amounted to minus 4.6 million in Q1 compared to minus 26.4 million in Q1 last year. Costs transferred to capitalized development costs in Q1 amounted to 3.4 million compared to 10.6 million in Q1 last year. This change is reflecting both savings initiatives implemented in the second half of 2018 and the divestment of the Pandion product group in Q4 of last year, but is also a result of an increase in research activities in Q1 2019. Research activities are expensed as they occur and are not transferred to capitalized development costs. Impact of depreciation, amortization, and impairments was 6.4 million in Q1 compared to 10.6 million in Q1 last year. Finance costs dropped 68% compared to Q1 last year to 0.6 million in Q1 2019. The result for the period amounted to minus 9.5 million Danish kroner compared to minus 22 million in Q1 last year. In 2019, we have changed the format of the income statement to an income statement by nature. In order to make comparison to previous reports easier, we've included an overview of the costs by function at the bottom of the income statement. Now let's turn our attention to the cash flow in Q1 2019, presented on slide 14. Cash flows from operating activities amounted to 4.5 million Danish kroner compared to minus 7.9 million in Q1 last year. Cash flows from operating activities in Q1 are impacted by a reduction in the net working capital of 5.4 million end of Q1 compared to end of Q4 2018. Compared to end of Q1 2018, net working capital is improved by 19.6 million. We've been working diligently on reducing net working capital the last couple of quarters, with improvements on inventory levels and trade receivables continuing throughout Q1 19. Net cash used in investing activities in the quarter amounted to 3.6 million compared to 11.6 million in Q1 last year. The resulting free cash flow in the quarter amounted to plus 0.6 million Danish kroner, up 20.5 million compared to Q1 last year. This is the second quarter in a row with positive free cash flow in Napatech, and a clear testament of the effects of the restructuring efforts implemented since summer last year. Net cash flows from financing activities in the quarter were 24.9 million, and cash and cash equivalents at the end of Q1 2019 amounted to 42.7 million Danish kroner compared to 20.2 million at the end of Q1 last year. I will now turn back to Ray to finish a few more topics and to bring us to the end of the presentation.
All right, thank you, Heine. Next slide, please. We happily announced on May 10th that we successfully completed our secondary offering, raising 76.7 million Norwegian kroner. We did this in 3 tranches shown here and previously presented. I am very pleased that we have secured the full amount of 76.7 million Norwegian kroner, and now we can focus on growing the business. But we will grow our business with an eye on our cash balance. We have a very focused intention for the use of the cash we just raised. We will do this by leveraging our expertise building FPGA software that differentiates Napatech, enhancing our offerings, and accelerating our delivery of new products to the market in 2019 and 2020, and to enhance our go-to-market efforts to maximize the revenue impact from our new products and new unbundled service revenue, while the market for SmartNICs is expanding. Our goal is to build momentum with new product growth and leveraging cost structure and maximizing shareholder value. Next page. Now let's turn our attention to our outlook. Next page. We expect revenue to be in the range of 150 to 180 million DKK, that's about 23 million to 27.6 million USD, which is a solid return to growth in 2019. We feel good about this after reporting our solid progress in Q1. Gross margins will be solidly around 68%, and after Q1, we have a good tailwind to keep this on track. Operating expenses will be in the range of 115 to 125 million DKK, but as you have seen, our goal is to try hard to improve beyond this objective where we can. And investments in development projects, or our capitalized development costs, will be in the range of 20 to 25 million DKK. This is significantly lower than in previous years, and we are also on track here. Depreciation and amortization will be in the range of 20 to 25 million DKK, and it's always good to keep in mind that as this market transition from hardware-centric solutions to software-centric solutions continues to happen, quarter-to-quarter order volatility may occur as customer markets sort out their technology buying strategies. But in conclusion, we are working very hard growing a business built upon a solid foundation of FPGA technology excellence. We are also working to live up to the expectations that we have with our shareholders. As I've mentioned before, my team's focus in 2019 will be to stabilize and grow Napatech from a solid foundation built on good product strategy and overall execution. We are looking forward to seeing the positive effects of our initiatives in the coming year. I hope the market will agree that we had a solid start in 2019 with our results in Q1. We will strive to continue this trend. I'm optimistic about Napatech's ability to stabilize and grow in an important market powered by FPGA technology. We are committed to find a way to succeed, and now we need to get that job done. Next slide. And now I'd like to invite Heine Thorsgaard to join me now to take your questions. If you'd like to ask a question, please dial into one of the phone numbers on the screen. An operator will answer your call and place you into a queue. Please keep your questions to 1 or 2 questions per caller. If you have already called in on one of the numbers, press 01 to ask a question. Operator?
Thank you. So once again, if you have a question and you're on the phones, just press 0 and then 1 on your phone keypad now, and then after I announce you, just ask that question. And if you find that question has been answered before it's your turn to speak, just press 0 and then 2 to cancel. And there'll be a brief pause while any questions are being registered. At this stage, there are no questions in the queue, so can I please pass it back to you for any closing comments at this stage?
All right. Well, thank you very much, operator. Once again, I'd like to thank everybody for joining us on today's earning announcement and presentation. I'd like to thank our shareholders, investors, and our employees. I hope you have a great day. Thank you very much.